If you paid $100K a year, you would get paid less than if you paid $33K a year. Same death benefit, but one we would get paid twice as much. The same amount of death benefit provides one with no cash value and the other one with over 75% cash value in year one. We would get paid 6 times more if we designed it in this way versus the other way. This is why whole life gets the reputation that it is expensive. When people say agents make bank on commissions, they aren't wrong. If we design it in this way, we don't get paid very much, so we have to do volume. It's the only way the customer wins and we stay in business. In this video, we're going to discuss exactly how much a whole life insurance agent could potentially make in commissions. If you are an agent and at the end of this video, you are upset at this video, I actually really don't care. This has happened multiple times. Every time I talk about commissions, we are getting somebody in our inbox, or even sometimes when Caleb talks about commissions on the BetterWealth channel, we get somebody in our inbox or in our comments really upset that we are undermining the industry in regards to how whole life insurance really works with commissions. All we're doing at the end of the day is just sharing information. You can design your policies however you would like to do it. We have our philosophies. We will design our policies exactly how we're going to do them. The way we design them for 99% of them is we design it for high early cash value to focus on the consumer who wants a place to storage capital. If you want to design your policies that are high death benefits with no cash value, by all means, your base to P ratio is your decision. Do not get upset at us based off of the fact that we choose to design in a specific way. So with that being said, for the consumers that are listening, I apologize for that note, but I had to say it. With that being said, we will get right into the numbers. All right, so how much does a whole life insurance agent truly make? Well, it depends. And it depends because there's a lot of factors involved. And it really comes down to the company you use and also the design of the contract. I'm going to give you 2 different examples of how much a whole life insurance agent truly can make off commissions. And here are the 2 illustrations that I'm going to share with you. The first one is going to be a policy that has a death benefit that is roughly the same. So you'll see on this left side, I have it at 2.3 million. And this right side, I have a death benefit of 2.3 million. You would say, wow, okay, death benefits are the same. They should get paid exactly the same. Well, if you look at the total premium that goes into the contract, there's $33,000 into this contract and $100,000 that's going into this contract. So right off the bat, you're like, oh, well, as an agent, you would get paid more money on the $100,000 than you would on the $33,000. But that is absolutely incorrect. If you paid $100,000 per year, we would get paid less than if you paid $33,000 a year based off of this design. Why? Well, let's just take a look at the cash value. The first year cash value is $75,000. And in the cash value over here, it is $0. So you have the same amount of death benefit. One provides cash value with 0, and the other provides cash value with over 75% in year one. And so the commissions that we would actually make if we designed it the one on the left, we would actually make right around $33,000. If we design this contract over here of $100,000, we would actually make closer to $15,000 is roughly what we would make. And so how you can kind of conceptually think about this from what a whole life insurance agent makes is there's a piece inside of the contract called base insurance. And that is just the foundational piece that makes this insurance. The higher the base you have in a whole life insurance contract, the more death benefit that there will be in the contract. When you have a lower base, that essentially has the ability to make the policy more efficient. Why? Because a higher base is essentially more cost. More cost essentially means that there's less cash value for the consumer. And so there's a reason why when you design a contract this way, you put 100 grand in, you have 75%, and then you put 33 grand in and you have 0. It's just due to the sheer fact that we've designed them 2 separate ways. One is going to benefit the death benefit and one is going to benefit the cash value. So from an agent's perspective, hopefully they do exactly what you come to them and say, hey, I want a policy that's death benefit for my family. Amazing. You can only pay $33,000 and get the same amount of death benefit for $100,000 of a contract. So this is why whole life gets the reputation that it is expensive. Because if you think about it, When you start to look at it from a death benefit perspective, $33,000 gets me $2,357,000. And I could get a term policy for likely $50 a month for someone of this age if they're healthy for the same amount of death benefit. That's why over here, we're not competing from the death benefit perspective. We're competing from a cash value perspective. The death benefit just happens to be gravy on top. So for the second policy, what we're going to do is we're going to compare the same exact dollar amount that is now going into the contract. So here we go. When we look at this policy, you're going to see the same dollar amount that is now going into the contract. So before we had $33,000 and $100,000, which gave us the same amount of death benefits. But now what we're going to do is we're going to do the same amount of premium that's going into the contract, and we're going to compare what the cash values are, what the death benefits are, and what does an agent make in this specific design. So when we look at the left side, $20,000 goes into the contract, about $15,000 of cash value. It's roughly around 75% again. And the commission that comes onto this contract is right around $3,000. If we look at this right side, you see that there's $20,000 going in the contract with zero cash value in the first 2 years. Why is that? Well, look at the death benefit. The death benefit is $1,400,000 versus over here $470,000. So what we have is the same amount of premium going in with two drastically different death benefits. One death benefit is $1 million less than the other. So on this right side one, you have higher costs of insurance, more fees. And because of that, you have less cash value as the consumer. Now, if you're an agent, you may say one is not better or worse than the other. And I could agree with that. I would agree with that if it is specifically tailored to that person. So the person says, I want lots of death benefit for this $20,000. Well, this is what you want to go for. You get as much death benefit as you possibly can that your heart desires for $20,000 going in. You're like, hey, I want to maximize the cash value. Amazing. $20,000, $15,000 of cash value. Too often I see, or people come to us 2, 3, 4 years later and say, hey, can you look at my policy again? I really wanted cash value, and I don't think it was designed optimally for that. I think we have a lot of death benefit. I get the illustration. I see what was happening the first couple of years, and this is how it was designed. And to me, that is where I think the industry gets a bad rap at the end of the day. So when I look at this contract in regards to what we would get paid on this side, we'd get paid close to $20,000. So $20,000 on this right side with no cash value, and we get paid about $3,000 with more cash value. So essentially, the dollars can go one of two places. They can go to the commissions as agent, or they can go to the cash value as a consumer. That is not a rip on anybody or any agent. That is just a true fact. I'm showing the numbers right here in regards to cash value and commissions, and that's just how this works. So we would get paid 6 times the amount on this one over here versus if we designed it this way over here. And I hear people say agents make bank on commissions. I think to myself, really, they're not wrong. A $20,000 paycheck for $20,000 a year into a policy would be unbelievable. Just think of it this way, from a business perspective, we literally could write 6 times less policies and would essentially make the same amount of money. So for us to essentially compete with somebody doing this type of policy, we have to write 6 times more policies to do so. Again, if we design it this way, we don't get paid very much. We have to do volume. It's the only way the customer wins and for us to stay in business. And that is perfectly okay. We here at BetterWealth value liquidity and control to have our dollars do multiple things. And that is why we call it the and asset. Borrow against our policy to do for other asset producing activities like real estate or business. And by doing so, we're able to create greater wealth and produce greater results. And we also have a death benefit still at the same exact time. And if we happen to not get enough death benefit right away, we can supplement it with term while our death benefit grows. And so this is kind of where people say, hey, you either get your death benefit or you get the cash value. And they kind of like have this argument that you only get one or the other. Honestly, it's facts. You really only get one or the other. But what they don't know and is argued is misunderstood. What I mean by that is that you could see that there's $15,000 here of cash value. I pay another $20,000 into the contract, right? But my death benefit absolutely goes up by another $50,000 Even though I put in 20 grand, my policy death benefit went up by 50 grand. When I borrow against my contract, when I die, the death benefit will pay off the loan balance. So essentially what's going on is my cash value is inside of my death benefit. They are one with another. It is growing significantly. So over a period of time, your death benefit will likely be at a dollar amount that you feel comfortable with to be able to pass down from a generational standpoint. And that is why when we design it appropriately, it becomes an incredible vehicle, because we're able to have a significant amount of death benefit to be able to pass down to our family, to charity, to just any beneficiary that we find a value in an organization that's near and dear to our heart. With all that being said, I'm just the messenger. I'm here to try to share the best facts possible in regards to how much a whole life insurance agent could possibly make. If you're an insurance agent out there watching this and you're new, hopefully this helps you make a decision on how you want to design your contracts, or makes a decision on if this is even something that you want to do. And if you are a consumer and you've always wanted to know how much do agents work that I'm working with, I hear there's so much commissions and there's high fees. All I want to do is know what that dollar amount is. And here, the And Asset, powered by BetterWealth, we just want to be transparent. We have nothing to hide from that perspective, and we feel like we should be as transparent as possible. So we just want to share the truth. Hope this helps. If you have any questions, put them in the comments, and we'll be more than happy to answer them.